Welcome to this video. In this video, I'm going to be doing a stock analysis of Beyond Meat. Now, you probably know this, but they had a huge ride upwards on these past days, and the reason for that is they just made a huge partnership with Walmart to be in 2,000 of their stores, and they also made a equity for death swap, and as well as being added to the Roundhill Meme ETF. Now, as you can see, currently actually we are trading on before this huge crash. Now let me remove my SMA. As you can see, we're trading sideways for quite a while here. As you can see, it's upwards and downwards as well. But then we had these shorters add up huge positions, and that is where this short squeeze happened. That is why it took such a ride upwards. That's because the shorters had to buy positions to cover their losses. So currently, we're actually trading where we were trading before. So chances are we're going to stay here, but of course we can also go downwards to where, as you can see right here, this is about the best technicals there is for this short period of time from where we are before this, after the shorters took their positions. So if we're going downwards again, my bet is we're going down all the way down to 1.12. Now I have to say I'm not a huge fan of this company, and I can tell you that later. But if you also look at the graph, I mean just look at this, it is not a pretty graph, and everybody is sitting at a loss with this. So it is a very volatile stock, because that also means once this happens, where it rises upwards in price, a lot of people thinking, great, I can recover some of my losses, or at least take some profit home if they were lucky enough to buy down here. Now, if you look financially for this company, it isn't great. I mean, look at the past 5 years. Lost money, and as you can see, after 2021, their revenue also went downwards: 464 million, 418 million, 343 million, and 226 million. And as you can see right here, their debt to market cap is also insanely high: $1.2 billion in debt and $217 million of market cap. Now, if we look at the price to sales as well, as you can see, of course, it is just going downwards. Of course, that's because the stock is cheaper and cheaper and cheaper. I mean, look at the revenue. As you can see right here, the retail, as you can see, it's also just falling downwards. Their food service, it's increasing a small bit, but then again, it fell down backwards again. Now, interestingly, like, there are both in the United States and international, but comparing this only one segment called international, and we see this poor sales, is not a great signal at all. You can also see in the statements, as you can see right here, if you make them annually, as you can see, operating income, I mean, just look at this. This really ain't pretty. So I would say be very careful in a stock like this. And we can also see overall it trades quite a lot in the lower RSI, as you can see right down here, meaning there are more sellers and shorters in the market. So I really wouldn't buy this share any time at all. Now, if you look at the seasonals of this stock as well, I mean, just look at this. If we go back to 2019, unless we have the two first years right here, it has been a poor stock to own. So if you bought after 2020, let's look at that, and you have an average loss of 47% a year, which of course is poor. Now, if you bought in 2020, it would be an average of minus 11%, and if you bought it in 2019, you would have an average of just 0.8% profit. So overall, it really isn't a great stock to own. Now, the technicals for this stock for the day is a buy, and for the month, as you can see, it's a sell. And that's, of course, even though it rose upwards quite quickly, still it is in a falling trend. I mean, just look at this, just falling. Now, the endless reading of this is quite poor. We have 5 strong sell and 3 hold. Now, of course, the annual EPS might be great. It really isn't, as you can see. However, in 2028, they're estimating to lose less money. It's called not make money because they're still losing money, but I doubt this is going to happen. To be honest, I can't imagine them still being a stock exchange company in 5 years. I do believe they're going to be taking off the stock exchange and go bankrupt, because I don't see them making any real money. And you can also see that down here in their annual revenue, as you can see, it really isn't that impressive. It is up and down, but to be honest, it really isn't that much money. And as I said, I mean, the debt, the amount of debt they have, of course, is insane. Now, they did make a debt for equity swap, but still, I don't believe they're not going to be taking even more debt. Overall, I'm just not a huge fan of it, and I also think they have way too many employees compared to how much of a loss they have. So to be honest, I would just stay away from this stock. I have to sell, and if I own the stock, I would just sell and get some of my money back, because I think it would be better invested elsewhere in the market. That was my stock analysis on Beyond Meat. If you like this video, please don't forget to leave a like and subscribe. And of course, if you want to see more videos like this, please leave the company terms analyzed in the comment section below.